Hey guys, and welcome back to another video, and today we're going to be talking about another SPAC merger. It's been a little while since I did a video about a brand new SPAC merger, but there's a new self-driving vehicle stock in town, so let's go ahead and take a look at it. This deal comes in between Aurora and Reinvent Technology, and the valuation of the deal is right around $11 billion. I believe it's 10.6 to be exact. But the whole reason that they're doing this merger is the same reason that a lot of young companies do it. They need some cash, and this deal will provide them with that cash in the form of $2.5 billion, as well as some additional PIPE investment. This is no joke of a company. They ended up purchasing Uber's self-driving section of their company, and they've been continuing to develop it along with their partnership with Uber. So make sure you stay tuned for the rest of the video so you can learn a little bit more and potentially look into this company yourself. What are the goals of this whole self-driving technology wave that so many companies are getting in on? Well, Aurora pointed out 4 big sectors for them. Number 1, it's going to increase safety. There are a ton of different car accidents involving car to car, car to person. In general, computers are always going to be the better driver compared to a person. Number 2, it helps people with something like a disability be allowed to travel outside of their home without having difficulty doing this. There are roughly 25.5 million people that have this problem. To go along with this, the average driver spends 54 minutes per day commuting, or 10 days a year. Self-driving may not specifically shorten those trips, but it would make them more enjoyable if they could be a little bit more relaxing and you had to focus a little bit less on actually driving. And the last one is that trucking, which this company is specifically targeting, we'll get into that in just a second, but that accounts for about 300 billion miles annually, and 65% of all goods are moved through trucking. Trucking is just one of 3 main markets that Aurora is going to be attempting to expand into. The trucking market is worth around $700 billion in the US and around $4 trillion globally. Ride hailing, so that's things like Uber, Didi, Lyft, that's $35 billion in the US. And local goods delivery, that's going to be stuff like your Uber Eats or your DoorDash, that's around $100 billion in the US and around $400 billion market globally. Aurora likes to compare the automation of transportation, or the movement towards self-driving cars, to the digitalization of advertising. The market size for that, when it first started in 1995, was just $160 billion, and this has now become a $1 trillion market. It's the same thing with the automation of transportation, starting out at just $835 billion, but expected to move into the multi-trillion by the time Aurora gets started. One of the main concerns could be competition. You see this company right here, Waymo, is actually sponsored by Google. It's a Google-run company. At this point, they're considered to be further along than Aurora. They already have a fully working fleet in San Francisco, and they've been making a lot more progress. Luckily, the thing is, with a multi-trillion-dollar market, there's room for a handful of winners. The total autonomous vehicle market is not just going to go to one company, so as long as Aurora can keep their name up there in the top, say 3 to 5, they're going to be making a lot of revenue. Going back to the 3 markets that they're going to be addressing, the value proposition for any company that they might develop a partnership with is actually very similar. The main benefits are the fact that their vehicles can operate at all hours because they don't require people. Another thing would be the efficiency of the network because it's all computer-based with no people to mess it up. And the third thing would be safety, which we already went over earlier in the video. Currently, for their 3 markets, they already have selected partners for 2 of them. For the trucking, they have selected partnerships with PACCAR and Volvo. For passenger mobility, which is your ride sharing, they already have partnerships with Uber and Toyota. And for the local goods delivery partnership, they don't have one locked up yet, but that's obviously something they're looking for towards the future. This page focuses specifically on some more benefits that a trucking company might have when developing a partnership with Aurora. The first thing is that it speeds up their supply chain because these trucks can run 24 hours a day, because they don't require a human to be in it working a 24-hour workday. This makes it so that they can reach the entire United States in a single day. The second thing is it alleviates the driver shortage. Once again, this covers sort of the same category. You're not going to need actual employees to drive the trucks, and currently there's a 60,000 driver shortage of employees. Increased safety, we already kind of went over this. Computers are always going to be a better driver than a human is. And one sort of interesting point is that you could see an increase of as much as 10% in fuel efficiency through things like eco-driving or capping the speed on the truck. All of this sounds really great, but one important thing to keep in mind is the fact that none of this is happening anytime soon, to be quite honest. The soonest that they'll have anything going on the major highways is 2023, and they won't have their entire roadmap set up before 2030. This is something to keep in mind with not only this company, but all electric vehicle or autonomous vehicle companies. Almost none of them, besides companies like Tesla, are fully operational yet. This makes this an incredibly risky investment with an incredibly high reward. So keep that in mind if you're looking at it. It's likely going to be a pretty volatile stock. We certainly didn't see this volatility today, even with the announcement, up just 1.5% and traded across virtually a straight line the entire day. So not too much excitement about this company yet. I think people could be cautious because of some of the other failures that came to the market through a SPAC merger. Companies like Nikola, even though that's a self-driving company, people associate it with a company like this, and it causes them to be a little bit more cautious, possibly for good reason. I hope you did go on to enjoy today's video, and if you did, make sure to leave a like down below, subscribe while you're down there if you're enjoying it, leave any comments that you have about a company that you might like to see reviewed, but other than that, I'll see you in the next one.